yeah, let's have a look here. API3. So yeah, I think at one point I was big on API3. Now I don't remember how or why I got $35 target. I don't know how early it was. It was probably a long time ago, and it was probably there's a weekly chart here. It may have been up here before the market actually broke down. If the market had stayed bullish and we had another leg higher, the new coins. My thesis or my theory possibly was something in here. The fact that new coins can run pretty hard. Now, I'm not sure if I'm correct on what I'm saying, but I'm just trying to think back and process how or why I would be saying that. But for me, it probably was, these new coins. When you get new coins that move up, and there's a weekly chart. Maybe I should break this down. Coins like Matic, for example, had a pattern like this to very start with, but when the pattern broke down, of course, then it became not the same. So $35, it is. We'll call it $2 right now. It's been fluctuating in and around the $2 level. We'll call it $2. That would mean it would have to 16x. But let's just have a look to see. I mean, it's a 4 or 5x to all-time highs, which is pretty nothing, to be fair. It's not a huge move, and even from the lows, right? If we caught the exact low on that, it's only a 10x to the very highs. So normally a coin would do more than that and go a lot higher than these previous highs. If it's only a 5 to 10x to the previous highs. Normally, in a real bull market, you would actually take out these previous highs up here. Let's move this so there's no confusion, and maybe just move this. There is a very nice apex, a 3-day apex developing here. So API3 is a $150 million market cap, so it's not that small. So obviously a 10x from here would bring it roughly up into $1.5 billion market cap. Can a 10x from here? I'm not sure, but I would probably say that if we are going into a bull market in all season, we should take out these previous highs, right? I do think that we should take them out. So it is tough to say, but if the market is going to explode like it has done in the past, every single all season in the past, and it looks like we're setting up to do that, well, I would say it can do 10x from here. So I'm not sticking to that $35 target. It is quite a lot to push it up there. But if we take this from here just down to the lows, you can see that would be a 20x from the very lows. It's not easy catching the very, very lows. Down cost averaging into this base, as I said. That was the supposed to be the goal. And the real goal was finding the first low here, finding your first major low. And what do you do below that first major low? Well, you look to buy below the first major low. So if you had followed my strategy, and it's not easy and it's scary in the moment, but as you can see that the strategy works, and you could check almost all altcoins, and the strategy would have got you in very, very well. If you had bought anywhere in here, but once you go below the first major low, you need to be buying and adding. That's part of it to try and get your average right down there. So I don't know about the the $35. I think $20 is more plausible. Now, don't get me wrong, some of these absolutely skyrocketed, might hit that $35, but to be conservative, we're a long way away from still predicting that. But I do like the chart. I think the chart is fantastic so far. It is setting up. It's setting up a 3-day apex, which is perfect. It's had these huge drop. I must measure this drop right now, but it's had the drop. It's had the 2-year base. Look at this increase in volume. Volume precedes price. Volume precedes price. So this volume is telling us that there should be a coming uptrend. People are accumulating here. Whales are accumulating here, and that's exactly what you want to see. The other very nice thing is, look at the RSI here. The RSI is looking very good up here, and so there's a lot of positives about this chart. It is a $150 million market cap, still, which is a little bit large, but that is okay as well. Just trying to get a measurement on this. it's about 90% drop. I mean, this wick up here, I'm not even going to count because it's not going to add much to it, 1 or 2%. But I would take it from there. That's the second major high, and probably a real high. The first one, no, the first one's a real high as well. I should take it from there, but I'm trying to be a little bit conservative. But anyway, 90 to 92% drop, wherever you can see, whatever you want to call that. I'm being conservative on it, saying 90. But all in all, 90% drop. Get the 2-year base, get the consolidation, get the, there's some sort of you could call a wedge pattern here that we have broke out of. That's exactly what we want to see. We talked about these wedge patterns forming for the last year. We were back in here and we talked about how these wedge patterns were forming, and we want to see these forming. They went right into the apex actually, and then we started to come out of that. But overall, you can't really fault this chart so far. It's doing what it should do. It's doing exactly what it should do after you get a crash like this. So far, this is bullish, and it's bullish above the white 100, right? As long as you hold above this white 100, that is technically still bullish. It is grinding. I would say that this is still going to grind quite a lot for a period of time, and it's not. Normally you'd like to see it grind here for a period of time, and maybe ideally even above the red 200, and then you'll probably get a big move, right? And I would say once this actually breaks, it's probably going to be up here very quickly. But the problem is the grind here can be quite frustrating and needs a lot of patience. So I would say, well, the dip we got yesterday, I mean, it was probably a fantastic dip, but it's probably not going to go too much lower than that, but it is definitely worth watching, right? Definitely worth watching. If you get a pierce below there, and this is still building out a base, that would be flawless. That would be an absolutely great gift. So if I had set alarms there, I'll set an alarm here as well. So I just set an alarm here. TradingView actually banned my account from alarms. I don't know what the issue was, but obviously I set quite a lot of alarms, and TradingView gave me some sort of slight ban on my alarms, and they also shadow banned my account for some reason as well. So I've had quite a lot of problems with TradingView over the last 6 months, and they make it awkward to set alarms. You see here, I can't set alarms here, so they removed that from my account. I mean, I pay for the alarms, so I don't know why they're removing that from my account. But anyway, I have messaged them about it, so I'm waiting to hear back from it. I want to get that fixed now coming into the new year. It is the new year, of course, but I wanted to get my account up and running for the new year. But anyway, that's enough of that. So yeah, I do like API3. This looks to be fairly good. This looks to be a good setup. It looks to be, this is a monthly chart, and this monthly looks to be a consolidation. So maybe on February, this might get the continuation up higher. Right now, it's still red on the month. Right now, we got that dip back into the previous month. So I don't think we need to FOMO into this. I would either prefer to trade a new month. There's been a lot of green months to the upside, and this looks like consolidation to me before going further up. So I would wait for a new month. This is an inside bar. This is an inside consolidation and an up move in an attempt to break out above this resistance point, as you can see here. So there is stuff happening here, and you can see this volume here as well. We've broke above this large volume as well, and we've back tested it here on this dip, or very close to it as well. So as well, as long as you're above this volume here, that's important. This is your large breakout volume, and this is market makers. You can see the increase in volume here. This will be your market makers and all here, and they have probably accumulated down here, and now price is moving up very nicely until we get signs that there's a top in. This trend is likely to continue. So it's 26 days left. I don't like buying in these circumstances, right? I would prefer to buy if it's flipping green and shows that real strength. Otherwise, I would wait and watch this to see if we can get a dip. Obviously, the ETF is going to be important. There will be another flush if the ETF is rejected. If it's passed, well, then maybe this might flip green, and we could. If it flips green, it's a great sign of strength, and it's probably going to go a lot higher. So, yeah, I would have patience. I don't like buying in the middle of the road here. I prefer to buy on the low, or prefer to buy into the strength as it's flipping green and trying to run.